Hello everyone, and welcome back to our Global Financial Markets Update. Today's video focuses on the outlook for gold prices in the United States. The analysis is based on data as of January 28, 2026. Gold is currently trading at historically high levels. This has captured the attention of investors worldwide, especially investors in the U.S. market. In this video, we will analyze the short-term trend of gold prices. Our analysis is based on official U.S. economic data, Federal Reserve policy signals, the U.S. dollar's performance, and ongoing geopolitical instability. Let's begin with the current market situation. Gold spot prices are trading around the $5,200 per ounce level. During recent sessions, prices briefly approached $5,260 per ounce. These are all-time record highs. Such price levels reflect strong risk aversion in the market. So, what is driving gold to these extreme levels? The first key factor is U.S. monetary policy. The Federal Reserve is facing growing economic pressure. Inflation has moderated, but remains above comfort levels. Economic growth in the U.S. is clearly slowing. The U.S. labor market is also showing signs of cooling. Job creation has weakened compared to previous quarters. Unemployment has edged slightly higher. These conditions limit the Fed's ability to stay aggressively hawkish. Markets are increasingly pricing in stable or lower interest rates in 2026. Expectations of lower rates are bullish for gold. Gold does not yield interest. Lower rates reduce the opportunity cost of holding gold. The second major factor is the U.S. dollar. Recently, the dollar has shown signs of weakness. The DXY index has retreated from recent highs. A weaker dollar makes gold cheaper for international buyers. This increases global demand for gold, particularly from U.S. and European investors. The third factor is central bank demand. Central banks continue to buy gold aggressively. Their goal is to diversify reserves and reduce reliance on the U.S. dollar. This trend has persisted for years, and it remains strong in 2026. Another important driver is safe haven demand. Global financial markets remain highly volatile. Investors are seeking assets with defensive characteristics. Gold remains the most trusted traditional safe haven. Geopolitical instability is a powerful catalyst. Tensions in the Middle East remain unresolved. The Russia-Ukraine conflict continues with no clear end. Global energy supply routes face ongoing threats. These risks increase uncertainty across financial markets. As uncertainty rises, gold demand typically increases. In addition, global trade tensions are resurfacing. Protectionist policies are becoming more common. This raises concerns about global economic slowdown. Once again, gold benefits from these fears. Now let's focus specifically on January 28, 2026. In the short term, gold's primary trend remains bullish. However, at these elevated levels, volatility is expected. Sharp intraday swings are likely. Technical pullbacks are normal at record highs. Profit-taking may occur at any time if no unexpectedly strong U.S. data is released. Gold prices are likely to remain well supported. Key support is located around $5,100 to $5,150 per ounce. Immediate resistance sits near $5,260. A clear breakout above resistance could trigger another leg higher. However, investors must closely monitor Fed communication. Any hawkish surprise could pressure gold temporarily. Economic data releases remain critical, including inflation data, growth indicators, and labor market reports. Weaker than expected data would support gold prices. Strong data could cause short-term corrections, but the broader trend would remain intact. Market sentiment currently favors higher gold prices. Major institutions continue to hold gold exposure. ETF inflows remain elevated. This signals strong investor confidence. Based on current conditions, our outlook for January 28, 2026 is cautious bullishness. Gold is likely to trade sideways to higher, volatility will remain elevated. Short-term traders should be cautious. Long-term investors may still view gold as a defensive asset. Chasing prices at extreme highs carries risk. Risk management remains essential. This is not a market for emotional trading. It is a market for discipline and strategy. Global uncertainty continues to support gold's role. But remember, no asset moves in a straight line forever. Understanding the trend helps avoid emotional decisions. The U.S. market remains the key driver of global gold pricing. Events on January 28 may influence short and medium-term trends. Investors should remain flexible and data-driven. Avoid excessive optimism. Avoid excessive pessimism. Let data guide decisions, not emotions. Before we conclude, this content is market analysis. It is not financial advice. Always assess your own risk tolerance. If you found this analysis helpful, please like the video. Subscribe to the channel for daily market updates. Turn on notifications so you never miss an important gold market update. Thank you for watching, and we'll see you in the next video.